Hello, welcome to my channel of Financepavilion, and this is my first video on YouTube regarding financial literacy, and I'll be helping you people to know more about finance. So please do like, share, comment, and please share this to maximum people so that they can learn about finance. So our first video is about why it is important to invest your money. So mostly many people do not know what do you mean by investment and why it is very important to invest your money in assets. The first major reason is to beat inflation. Many people must not be knowing what actually is meant by inflation. So I'll be just explaining what do you mean by inflation. So we'll take a case of steel. In 2019, the per kg price of steel was 53 rupees per kg. But when we reached by the end of by 2022, the cost of the 1 kg of steel went up to 90 rupees per kg. So you can see from 53 to it went to 90, and if you had around 1000 rupees and if you wanted to buy a steel, then you would have got uh, you in year 2019 you could have got steel of approximately 1000 by 53 kg by 53 that would have come around, can say, around 20 kgs. But as the year passed by and the year 2022 reached, the steel price went to 2022, and within same money, that is 1000 rupees you have, and if you divide it by divided by 90, okay, you would have got somewhere around 10 11 kgs. So from the same price, from the same amount, that is you were having 1000 rupees, but you got initially you got somewhere around 20 kgs, but in year 2022 you can buy only 11 kgs with that 11 kgs with 11 kgs with that amount. So because every year, because of the inflation, money is actually losing its value, so that with the same amount of value, with the same amount of the value, the amount the material that you will be buying, it will be, the price will be going on increasing, so that if you need to maintain the value of the money, the return should be greater than inflation rate. Now currently every year the rate of inflation is around 8%. The average inflation rate for the 10 years is 8%, but the last year it was around 6%. Now if you want, if you have rupees 1000, now in this case only, if you have rupees 1000, the next year this amount should increase by 6%, that it should become 6% of 1000, so that will come down to 60 rupees. So by the next year you should have this amount, that is to beat the rate of inflation, so that you are in par with inflation. But what is happening is the FDs, the FDs are giving you the rate of interest, that is 5%. So if you want to beat the inflation, that is 6% rate of inflation, then you should invest the money in such assets that you will get the rate of return more than 6%. So investing money can fetch you returns that will beat the inflation. So you can invest in mutual funds, you can invest in stocks, you can invest in debt funds, so that your money will go on increasing. The second important point of investment is, if you want to create a wealth, then you should regularly invest. If you invest for a longer duration of time, that is, longer duration of time means basically for 20 to 30 years, you can generate a huge corpus by investing a small amount. If you just invest rupees 5000 every month, after end of every month for 30 years, and let us say you are investing in a mutual fund that is giving you return of around 12%. Mostly the mutual fund gives the return from 10%, from 10% to 14%, but if you invest that in 12% return every year, you will be accumulating 1.5 crore after 30 years. So just by investing a small amount, that is rupees 5,000, you can generate a huge corpus of 1.5 cr. So that is the power of compounding. Mostly what people do is they invest for a shorter duration of time, from 0 to 5 years, and after they are not seeing any results, they withdraw the money and they keep in the fixed deposit. But if you keep investing for a longer duration of time, that is 20 to 30 years, you will be generating a huge corpus. So you can invest in the mutual funds such as index fund. Index funds have given a 14% CAGR, 14% CAGR, that is the return for every year. And if you had invested in Nifty index fund, you could have generated huge corpus or huge wealth after the end of the 20 to 30 years. The third point is the retirement goals. Initially, initially when you are working, you get a monthly salary. You get a monthly salary, but once you retire, your monthly income will be stopped. Now after 60 years of age, most of the people retire. So after retirement, your monthly income will be stopped, and you will be financially dependent on, you can say, on the other people. So to take care of these expenses after the retirement, you should have some amount of fund that you will be able to spend or use it for your own expenses. But after retirement, these expenses, or the, can say, expenses after the retirement will be stopped, and you will have to depend on someone else. So this is a risk. Okay, so you should plan for your retirement when you're working or when you're having a job. So investing in the stock market, PPF, NPS, that is National Pension Scheme, public provident fund, mutual fund, debt fund, can grow your money and you can relax after your retirement. Now let us say after the end of, you can say, every year, if you invest rupees 5,000 rupees, after the end of the every month, if you invest rupees 5,000 for around 30 years, you can generate a corpus of 1.5 cr, 1.5 cr, with a interest rate, with a return of 12%. So this 1.5 cr, you can use it for your after, if you have any dream, or if you want to have a vacation, or if you want to start some business after your retirement, you can use this corpus, and so it will be your retirement goals will be satisfied. But if you are not planning it, then you will have to struggle and you will have to find a job or do something so that your expenses are paid. If you are not, if you are not financially independent, then it might cause a problem during your retirement. And so that's why it is advisable to invest in assets that will take care of your retirement goals. The next is financial independence. Many of us do not want to work till the retirement, that is 60 years. Many of us want to retire before we reach the age, that is 60 years. And many of us want to retire by the age of, you can say, 45 years or before 40 years. So can we can do things what we had dreamed. No one likes to work from 9 to 5. So majority of us will want to retire by 40 years or maybe by 50 years. So investing in the assets such as stock market, mutual fund, can make you financially independent by the age of 40 to 50 years. So you'll be once you invest, you'll be getting the returns in the form of dividends, returns. So you can use these dividends, returns to start your own business or go for a vacation or travel the world. So basically, if you are investing the money in the initial phases, that will allow the money to grow and it will have a compounding effect. When the Warren Buffett started investing, his money started growing exponentially at the age of 50 years. So if you want to become financially independent, then you should start investing your money when you are in your 20s, so that you can become financially independent at the age of 40 to 50 years or before that, depending upon the amount of investment and the returns that you get. Many of us have a dream in their mind. So if you have a goal such as constructing a house, buying a car, starting a business, traveling, and that can be achieved by investing in the right assets. So if you have any goal, start planning for that goal, start accumulating that money, or save that money and put it in the right asset, which will generate you 10 to 15% of return. If you are targeting this, that is 10 to 15% for a small vacation, for buying of a car, so this will be achieved in a short. Now let us say if you want to buy a car, you can plan it for 5 years. You can accumulate that money and you can invest in a right fund or a right asset that will grow the money at a rate of 10 to 15%. And planning for a short term goals are important, and consistency is a key to achieve the goal. So if you are consistent enough that you are investing the money consistently, that will be having a compounding effect, and you can achieve your dream or a goal of buying a house, buying a car, starting a business, traveling, which will be achieved in a, you can say, in a right time. So if you liked our content, please like, share and follow, and please don't forget to subscribe to our channel, that is Fin Pavilion. Thanks a lot. We'll be back with another YouTube video regarding financial literacy. Thank you.